Everyone is panicking right now because the stock market is crashing. However, this is a time to stay calm. From actually looking at the SPY chart, we can see that from the highs to the lows, we are down about 8.5%. Now, that's not a small drop. It's understandable as to why people are panicking. But now is the time to stay calm and gather up some investments. Today, I'm going to show you the 4 top stocks to buy right now for great returns. As the saying goes, buy when others are fearful and sell when others are greedy. For those that are newer to the stock market, I'm going to try and keep it as simple as possible when going over everything. Now, if we take a look at the NVIDIA chart, from the peak that it had around a month ago at 140, it's down 23.55%. Now, this is a huge drop because NVIDIA is one of the largest companies in the world. 4 times every single year, a company will release what's called an earnings report. Basically tell us how much money they made in the quarter, as well as how the ins and outs of the business have been operating. NVIDIA released their latest quarterly earnings report not too long ago, and that's partially why it's been down. But if we take a look at the actual earnings report, the numbers are pretty good. Now, if we take a look at the revenue metric, we can see that it's up 78% year over year. Revenue is how much money the company generates from selling products and services. And the net income, this is how much money the company actually goes home with, is up 80% year over year. That's absolutely ridiculous. It's growing so fast, even for being one of the largest companies in the world. Now, you might be wondering, if the earnings report was so good, why did NVIDIA go down after releasing it? Well, the main reason is because the gross margin metric was down 3 points year over year. The gross margin metric is the percentage of revenue a company keeps after subtracting the direct costs of producing its goods. This shows how efficiently it makes money before accounting for operating expenses. So it's a very important metric to understand how much money a company actually makes. So it is understanding how some people who are uneducated on the topic might worry. This is absolutely nothing to worry about because the company had a conference call after the earnings report, and the chief financial officer said that the company expects gross margin to improve later this year, returning to the mid-70s. So the main selling point from the earnings call was just debunked right here. Amazon is another large growth company that's down with the overall stock market. From highs to lows, it's down about 18%. Here is the revenues chart for Amazon. Each one of these bars represents 3 months of their sales. So in the most recent quarter, they generated $188 billion in revenue. And we can see that the company is clearly on an upward trajectory. It's very consistent and reliable, and nothing has changed about that. One of the main reasons that Amazon is such a compelling buy right now is that the net income margin has been increasing steadily pretty much every quarter for the past 2 years, right? So quarter 2 fiscal year 2023, the net income margin was around 5%. And in the most recent quarter, it was above 10%. Now, this net income margin is still kind of low for one of these very large companies. For example, the net income margin for NVIDIA sits somewhere around 55%, which is much higher than Amazon's. However, Amazon has done a great job with improving it over time. Something that a lot of people aren't taking into consideration is how robotics will be helping Amazon's net income margin. This article talks about the future of Amazon and robotics, and researchers at Morgan Stanley estimate that a new generation of robotics-led warehouses could generate $10 billion in annual savings. This would significantly help Amazon's net income margin. The next stock that we're going to take a look at is Ouster. Ouster is a much smaller company than the rest on the list, but it yields a much higher possible return. And I'm going to show you exactly. I have compiled some different research points for Ouster, and we're going to be jumping through a couple tabs here. So if you remember when I was going over the Amazon thesis, I showed you this Amazon robot with this little circular dinghy up here. This is a sensor. This is a LiDAR sensor, and it comes from the company of Ouster. Now, Amazon has been talking about scaling up their robots rapidly, and Ouster plays a key role in that. Keep in mind that Ouster is a much smaller company than most on the stock market. Its market cap is $388 million. So to have a deal with Amazon and them constantly buying their products as well as scaling up very quickly is a big deal. Next, what we're going to do is actually scroll through the Twitter's feed. This is the company's Twitter. And I know it doesn't seem like the best form of research, but just watch me do it and deduce what you want from it. So the last time Ouster reported earnings was November 7th of 2024. So everything on from that point is basically news that a lot of people haven't seen, right? This post has 17 likes, this one's got 28, and these are huge deals that Ouster is making. Right here, they have a deal with Utah, choosing their Ouster LiDAR sensor for traffic. Right next, we got, this is them talking about working with Amazon. Right here, here's one Amazon robot that uses its sensor, which is right here. And then here's the second robot that uses Ouster's sensor. Now this is huge news, guys, right? And this post has got 50 likes. It's Amazon collaborating with a fairly small company. Here, Amazon also talks about how much they actually like the sensor and the automation that it brings. Now, if we keep scrolling, see that the CEO has actually done some interviews fairly recently as well on YouTube, just talking about the company and its future. Then they're talking about more collaborations with their LiDAR sensors to enhance traffic systems and technology, which means more deals to come in the future. And again, this post has only got 28 likes, which is very little, right? So a lot of people are missing out on this. The market is not seeing this opportunity. And if we just keep scrolling, guys, you just see a bunch of great stuff that's posted after November 7th. So this stuff is yet to be logged onto an earnings call, transcript, whatever. Wall Street is yet to see most of this. Right, here's another deal covering 120 intersections to manage traffic in Tennessee. That's a lot of sensors, and that's a lot of software to be using. All right, and if we keep scrolling, we see collaborations with John Deere. Different companies, Serve Robotics, one of the most popular robotics companies. Qualcomm has also been seen using their sensors, and Qualcomm is one of the largest semiconductor companies in the world. A little further down, we can see John Deere released a video with them actually using the sensors and how it brings autonomy. A little further down, we can see another Blue City deal. Blue City deals for Ouster are when traffic intersections use the LiDAR sensors to help manage the traffic and make it more efficient. Now, icing on top of the cake, guys, let's take a quick look at the LinkedIn. This is the actual LinkedIn page for the Ouster company. Now, in a post just yesterday, which was 16 hours ago, they talked about how they're working with some of America's defense system companies. And here they highlight several Ouster companies are featured, including, now this is a big one, Ondural Industries. I'm sure you've heard of Ondural. If you haven't, it's one of the fastest growing defense system companies in the world that is responsible for protecting America. Unfortunately, Ondural is not publicly traded. People are looking for angles to invest in companies that work with Ondural. And now, yesterday, they've made it public that they are actually working with Ondural. Last but not least, let's take a look at the analyst estimates. In 2024, Ouster is expected to grow 33%, 2025, 31%, and 2026, 53%. All right, so analysts are expecting Ouster to grow at a pretty quick pace. There are currently 4 covering analysts on Ouster right now, and they all give it a buy rating. It has 5 out of 5 stars, and the average analyst price target is $13 per share. The current price per share is $7.97, so this presents a 63.11% upside. All right, next up, we have AMD. Everyone currently has some pretty low expectations for the company. So if we take a look at the forward PE valuation metric, it's currently sitting at 20.9, which is pretty low considering the analyst estimates. Right? If you don't know too much about investing, this part will be a little harder to explain. But in fiscal year 2026, the top line, which is sales, is expected to grow 21%, and EPS is expected to grow 35%. Now, this is quite high, especially when it has a valuation metric forward PE of only 20.9. That's pretty low. So if we take a look at the analyst estimates price target, currently the average sits at about $148.34 per share. Now that presents a 50.57% upside, which is pretty high. Let's take a look at the AMD chart and review some of the technical analysis. So we can see that AMD has made its way down to this rectangle, which we call a demand zone. Now, what makes it a demand zone is that previous interactions at this price range, which is currently at around $100, we can see that there were more people buying the stock than there were selling the stock. Right, so this candle is back in October of 2023. We can see when it came into this demand zone, it shot right up out of it, as well as in September of 2023. Now, sometimes a demand zone is a supply zone, which is turned into demand. So if we take a look at March of 2023, at this $100 interaction level, it actually rejected it. Right, there were more sellers than buyers, which caused the stock price to go down. Soon after, we pushed up from overwhelming buyers, made its way slowly back down into this demand zone, and made its way up to over $200 a share. Now, after all this time, AMD has finally come back into this demand zone, giving us a chance to enter, knowing that in the past, people at this price range bought the stock and there were way more buyers. That is all for today's video. If you enjoyed it, feel free to subscribe for more videos in the future.